For years, the U.S. housing market boomed. The economic growth, ultra-cheap mortgages, all drove massive homebuyer demand for more than a decade. And for years, people have told me home prices have raced higher, it's unsustainable, homes are unaffordable, and therefore home prices must fall. Things have to get back in line, don't they? So that's a perfectly reasonable and quite common hypothesis. The interesting reality is we don't see any evidence of it happening yet. Home sales have crashed over the last 2 years with the more expensive money. Inventory is building still. And in fact, this week, available inventory of unsold homes rose again across the country, pretty much in every state. Transaction volumes have been low for 2 years, and supply is gradually increasing. Yet, aside from a few months last year, home prices haven't declined. So, to me, the more compelling question isn't when do home prices crash, it's why aren't home prices crashing? It always seems like the home price correction is just around the corner. Maybe it is. So even now, when we have obviously low demand, we still don't see home prices moving lower yet. What's going on? And price cuts have stayed roughly level for the last 2 weeks. The least popular properties are being withdrawn, and we have what we call downside stickiness in asking prices. So at Altos Research, we track every home for sale in the country, all the prices, all the supply and demand, all the sales, all the changes in that data, so that you can understand the changes in that U.S. housing market immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research. It is Monday, September 23rd, and here is all the latest housing market data. So let's start with home prices today. The median price of homes that went into contract this week jumped to $389,900. That's an increase of 1.6% for the week. And home prices are staying in that 3 to 5% appreciation range over last year. It's the second week in a row with an uptick in the price of the homes going into contract. So I love this pending sales price as a proxy for future home sales. These are the homes that are getting offers today. And these sales will close in a month or so down the road. So the price jump, frankly, surprised me a little bit this week. It would be very normal for sales prices to decline sequentially in September. So in June, July, and August this year, you can see the dark line curving more steeply towards the prices paid over the last 2 years. So it's just 2 weeks of home prices climbing now, though. So I try not to read too much into short-term moves like this. There's always some bouncy noise in this series. But I think it is notable that these sales price measures haven't bounced the other direction. So we want to keep our eyes open for signs that consumers are responding to newly cheaper mortgages. This could be where we're seeing it. So even if the purchase volume hasn't picked up, maybe we can see it in the price point where people buy. So when I ask the question, why aren't home prices falling? This is what we're talking about. Home prices aren't falling. Could they fall? Yes, you bet. Look at the light red line here from 2022. Demand cratered in September 2022, and home prices dropped instantly, but that's not happening now. Meanwhile, the median price of all the listings in the active market is $445,000. That's basically unchanged for the last 2 weeks. It is fractionally above last year at this time. The price of the newly listed cohort this week is $410,000, which is 2.9% greater than a year ago. So why aren't home prices falling? Home price appreciation is aiming for just 0 to 3% gains for the year. And it may be next year before we could measure home price declines. Or it could be that newly cheaper mortgage rates are creating a floor for prices. Inventory is still growing, clearly, across the country. We've seen 2 weeks in a row with over 10,000 unit gains. So there are now 725,000 single-family homes unsold on the market. That's several percent more than where I expected the year to top out at. And we still have several weeks before inventory starts declining for the fall. So we added 1.6% to the unsold inventory this week. That's a pretty big jump for September. Last year, we were adding closer to 2% per week, but we haven't seen the market really turn the corner for autumn yet. So our model has the last week of October before we hit the absolute peak of inventory for this year. There are 37% more homes on the market now than a year ago, 37%. That's shrinking a little bit each week because inventory was really climbing quickly a year ago. So it now looks like we'll end the year with about 27% more homes unsold at the end than at the end of 2023. So there's 37% more unsold now, and it looks like we'll end the year with 27% more unsold. In this view, the dark line of 2024 has ticked up strongly in the last 2 weeks. You can see that at the right end of the 2024 line. There are scenarios where this line keeps climbing into November, and I'll talk about those in a moment. That leads us, though, to the theme we're exploring today. Like, if supply is so much greater, why haven't home prices declined? Well, there are 70,000 new listings unsold for the week. That's a healthy number in the middle of September. In fact, this is really the first time in like 3 years that we've had a normal number of new listings in September. There were 70,000 new listings, single-family homes unsold, and another 10,000 new listings immediate sales. So that's an increase of 7% more sellers than a week ago, and it's like 10% more than the same week a year ago. So 80,000 sellers in a week isn't a lot. It's 10% more than last year, but we've averaged about 10% more than sellers in 2023 all year long. But in the era before the pandemic, seller volume was more seasonal. So by mid-September, the number of new listings would be falling each week. See the gray lines peak here in May and then decline very clearly in the second half of the year. Since 2020, the U.S. real estate market has lost much of that seasonality. So see, this year's dark line may be extending more horizontally late in the year. So that shows relatively more sellers in the fall than there used to be. I don't know if these seasonality changes are permanent, like do we just have supply and demand for housing spread more evenly through the year now? Or if late year inventory climbs are just an artifact of a really slow market. But I don't know which one it is, but at least this week we saw inventory build as much as we did during a given week of May, June, or July this year. Is it too many sellers? And when I say too many, I mean, will there be significantly more sellers than buyers, creating a big enough disparity to create downward pressure on home prices? So home prices haven't fallen, but is this like finally the trigger? It doesn't feel like an immediate trigger to me. It doesn't feel like immediately too many. I don't detect panic sellers, for example. We don't see prices slashing. I do suspect that next week we'll actually see this new listings number dip again, but if it doesn't, that will actually be a very important trend to watch. So for example, does late year new listings volume reflect, for example, institutional investors ramping up unloading their inventory in the fall of 2024? If residential investors who have been net buyers for, say, 12 years start to unload because the returns are weak, then might we see this new listings line, the dark line here, stay above the gray lines into the fourth quarter? If that happens, then might we start to see an answer to that home price question? Why haven't we seen home prices fall? Well, maybe we haven't seen sufficient sellers yet, and we could be on the cusp of that transition. This year, however, we have had fewer and fewer immediate sales. We started reporting on this immediate sales phenomenon during the pandemic. At the time, demand exploded, buyer competition was intense, there were these bidding wars and the sight unseen purchases. So immediate sales are a really insightful way to understand home buyer demand. So we've only tracked immediate sales really since 2021. There are now fewer and fewer happening each week. So if you're a home buyer, you don't feel any competitive pressure right now. Earlier in the year, places like Boston still had very tight inventory. They still had bidding wars on the best properties and immediate sales. But inventory is finally building, even in places like Boston, and buyers are watching rates drop so they don't feel urgency to make an offer. There were only 10,000 immediate sales for single-family homes this week. That's a couple percent more than a week ago, but it's 25% fewer than the same week last year. This week had half as many immediate sales as we measured in 2022. And in the pandemic, we were buying everything in sight. It carried momentum into 2022, surprisingly longer than I expected. But now is when it looks like that frenzy is finally gone. The total number of homes in contract actually ticked up this week to 360,000. The weekly new pending count, the sales that started this week, is up to 62,000. That's up 1% from last week and about 4% more than a year ago. So home sales each week are still 10% fewer than 2 years ago. And all year long, I've been looking for signs that home sales might turn the corner. They have not. I'm still squinting at the dark line here to find any indication that buyers even care about the cheaper mortgage rates, the cheapest in over a year, getting close to 2 years. This week, the sales ticked up with slightly more new pendings started. It's encouraging that sales ticked up. I'm not ready to call it a trend yet, but these are the signals we're watching for. Next week, though, I expect the new pendings chart here will be the chart data to watch. Not because home sales are surging, but because we get an easy baseline comparison to 22 and 23. September 22 was a real shock with continued mortgage rate jumps. Sales tanked at the end of September 22. You can see that in the light red line here. So here's a scenario to watch for next week. Do we have more sales at the end of September 2024 than we've had in 2 full years? Are we finally at the nadir of the home sales drought? If we get another week of just tiny marginal benefit that buyers are taking advantage of falling mortgage rates, that'll keep the dark line elevated, and suddenly it'd show more sales than each of the previous 2 years. So even though there are still very few sales happening. Anyway, that is next week's watch. Meanwhile, 39.9% of the homes on the market have taken a price cut from the original list price. That's 20 basis points fewer than a week ago. So when we seek to understand whether prices are falling or are about to fall, this price reductions gauge is very useful. The clearest signal from the price reductions chart is how weak pricing was in the fourth quarter of 22 and 23, and how this year looks different. When homes are listed for sale and don't get their offers, they have to cut their asking price. And price cuts really jumped when rates jumped in each of the last 2 years. So I started today talking about home prices, and we will finish here too. As the leading indicator of sales prices, you can probably see the impact of lower mortgage rates here. We have just a few more sellers getting their offers, so the price reductions line isn't climbing now. I expect this line to peak in November with the season, but it's important to note the recent behavior. So these big trends from earlier in the year are shifting now, and that's why we do this data each week. If buyers are finally moving, we'll see it in this data quickly. Maybe the mortgage rates have finally created these conditions that buyers and sellers can finally start making some new decisions. But they need to hear that data directly from you so they know how to act. So you should join Altos. Go to altosresearch.com and book a free consult with our team. We will help you know how to talk about the market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started.